As at the end of trading Monday, the second M-Akiba bond had registrations totaling 277,800. The offer had attracted 334,000 bids. Launched in June, the government hoped to raise 1 billion shillings by close of this Friday in the second bond after the first special limited offer raised 150 million shillings.
I don't think they'll be able to hit the 1 billion shillings target. And the explanation is that there is a policy problem when it comes to M-Akiba. And there are two ways to think of it. Number one, retail investors. In our history, Dan Blair doing corporate bonds, we haven't seen retail participation over 10%. In fact, in absolute terms, we haven't seen over 200 million on any of the corporate bonds that we've issued. And some of these have been from very superior, fundamentally sound companies.
So far, about 20% of the bond has been subscribed, leaving a balance of 808 million shillings. And this could be the reason. We are net borrowers, we are not net savers. So, if you look at KCB, M-Pesa, if you look at M-Shwari, all those products, the underlying clients tend to be net borrowers, not net savers. So there is a tenor issue. I think 3 years is too long for retail investors. The government set a minimum investment of 3,000 shillings to woo retail buyers with a 10% tax-free interest which matures in 3 years. This is further complicated by good returns from government bonds and treasury bills.
The rate cap has sort of delinked the cost of government borrowing from every other lending rate in the market. So the government has a superior advantage when it comes to borrowing. So they definitely would want this product to work, but they do not need it to work because they can be able to get money at a lower cost through other channels.
Analysts now say pricing and the maturity period could be relooked at to encourage more participation.
I do really advise the government to go back to the drawing board and sort of restructure the product, make it shorter to encourage retail investors to go in. And then maybe you can change the pricing to encourage institutions to go in.
The M-Akiba bond had a green shoe option that would have seen the government accept bids of up to 3.85 billion shillings. Ronald Willie, News Hour Business.